Welcome back. You're watching Trade of the Week, and today we bring you a technical analysis on Capitec, Sasol and Pepkor. Rob Pietropaolo, co-head of trading at Unum Capital, joins us with the analysis. Thank you so much for your time, Rob. Let's actually start off with Capitec. People have a varied relationship with Capitec and perceptions, including the fact that a lot of us regret not investing in the bank 10 years ago. A lot of people also now, looking at how the share has grown from strength to strength, where it's been looking expensive for quite a few years, and people hesitate in terms of when to get into the stock, and a lot of people also maybe questioning how far it can grow from here on out. But today we're really looking at a technical analysis and trying to see which direction to go to in terms of short-term trades at the moment. So what are you seeing there?
Look, I think the stock has run up very, very hard, as you can see. I just sort of pointing out here where the previous high was at around 2,400 Rand a share around April. And the other day, it just shot through that like it didn't even exist. And then I think that was on the back of a trading update. Yes, it's no lie, Capitec is very expensive. It's the most expensive of the banks listed on the exchange. Yeah, but just to give you a visual of just how much it's overshot that previous high. I think it touched 2,820 odd Rand the other day, where the previous high was 2,400. So really shot up very quickly in no time. And I think we await their earnings to see what those are going to look like pretty soon. But interestingly enough, on Friday, that candle kind of gave me a sell signal. Wish we were doing the show on Friday, because I think today we'd all look like rock stars. But very significant, that's almost like a falling hammer candle. So what that shows you is that Friday's price action, it did make a new high, but failed and started selling off throughout the rest of the day to close very near the low of the day. So that's kind of a signal. If you are holding Capitec, maybe it's not a bad time to take some money off the table. I'm not saying it's a short sell, but I would definitely be protecting my profits at these levels, and looking at what the markets are doing today, it's probably not a bad idea, because I think we're going to get another red confirmation candle, which could see us wait for the stock to find its feet again, which might be at around that 50-day moving average. You put sort of between 2,400 and 2,500 Rand a share. But yeah, for me, expensive, overstretched, overshot the mark too quickly. I'd be taking some money off the table.
But yeah, some though, not all.
Depends on your time frame. I think Capitec's going to give you another opportunity. We've got lots still to happen. Interest rate decisions from across the world. Bank earnings coming up very shortly. So it might not be a bad idea to sit on the sidelines, especially if you're holding Capitec. I really do think there are probably better opportunities, and look for something else, maybe in the same sector. But I certainly wouldn't be holding too many of them at these levels now. Yeah,
you talk about a falling hammer. How far can a falling hammer go? Can it transition into kind of a bear trend, or?
Look, I wouldn't say that. It's just an indication. That's one specific candle based on the price action of one day. So the price action of Friday has basically said to me, investors don't like it at 2,830 Rand a share. And they sort of sold it off throughout the day, taking their money off the table, and I think that's smart. So it's just an indication. If today it looks like we're going to get another red candle which confirms that falling hammer, that's really your signal to take some profits here and wait and see what happens next. But like I said, this has overshot the mark for me by quite a way.
And I'm looking at the price moves again today, and it has extended those losses that we saw on Friday as well, down almost 3%.
Well, that's why I said if we did the show on Friday, we'd look like rock stars.
You know what? we move. Let's move on to Sasol, because talking about falling things, oh my goodness, 9%. on the day on Friday.
Yeah, and I think it's down another 4.5% or 5% today. But look, I've said it before. If you look at that big orange line on the chart, that's the 200-day moving average. And Sasol hasn't gotten anywhere near attempting to test that 200-day moving average. And we always have this little saying that if a stock is trading below its 200-day moving average, it's not a very healthy one. And we did feel that at around 150 Rand, that was fairly priced based on the last set of results.
Yeah.
And then, yes, got smacked down on Friday. And we've got a continuation of that today. And unfortunately, what I think is going to happen here is we've broken, on today's price action, we've broken that 50-day moving average, which is a very bad signal if you're long, because then I fear Sasol needs to find some support. And the only place we can find it now is that previous low in June at around 116 bucks. I do see the stock going below 120, where maybe there's an opportunity to get back in, but I'd be running away from that stock at the moment.
You know what it is? So I was on leave on Friday, Rob. So for me, everything just seems, I come back and everything just seems terrible. Everything's in the red. Was there anything specific on Sasol on Friday, or was it just caught up in the general negative sentiment of the market?
Not at all. I think fundamentally, the data out of the US was terrible.
Yes.
And then we saw flows over the weekend in Asia. So Asia is where all the damage got taken. And I think it's also like a bit of an emerging market thing, but commodities in general on a hiding to nothing over the weekend. So it's one of those things. The oil price also down. Not that Sasol's very much of an oil play at the moment, but they do have hedges in place. So I think Sasol, along with all other commodities, just following the trend that you don't want to be in resources at the moment, and oil is one of those, unfortunately. Yeah,
so basically at this question, you're not even thinking about, a long-term position on Sasol, and I guess basically the whole commodity space. At this point, it's just for short-term trading and just trying to find opportunities within that short timeline.
Yeah, but also it helps to find yourself an exit. You also need an exit strategy, because if stocks only went up, then we'd all be rich.
Right.
So this is just a signal to say, you know what, if you're holding Sasol and you thought it was going to get through 150 Rand, well, Friday changed that completely.
Yeah.
And if you think it's going to recover, I'm sorry to say, I don't think it's going to hold these levels, not today. And I'd be looking to rather re-enter later, closer to 115, 116 Rand, and then try again when the fundamentals change.
So it has been a tough time for Sasol. It's actually been very interesting to see the stock, particularly over the last year, both from a short-term trading position and also looking at long-term operational fundamentals as well. Well, let's go on to the retail sector, which is Pepkor. Quite a lot that has been going on with Pepkor. Of course, Pepkor looking at the kind of changing dynamics of their operations, but also the IBEX, one of their shareholders, trying to get rid of, offload some of their shares on Pepkor. But from a short-term perspective, firstly, well, what does the picture look like?
Well, this chart basically says it all. There's a very definite resistance line. You can see where Pep has kept bumping its head around 20 bucks for quite a while now.
Yeah.
But interestingly enough, last week showed different price action where it actually, if you just look at that green circle on the chart there, it actually broke right through that resistance and managed to stay there even on Friday when the market was selling off. So that is quite bullish. Yes, the stock is a little bit overbought, and I think that is a cause from that rally, that breakout. So interestingly enough, okay, look, Pep is down today, but I think this is a buying opportunity. It's coming down from overbought levels, and for the first time in a while, it's actually shown impetus that it actually wants to break out higher. If we just zoom out, just to give you an idea of where that previous resistance actually was. So we've zoomed all the way back out to 2022.
Yes.
And it fell from that 24 Rand level. And it has staged the recovery from sort of the first half of 2023 all the way up until now. So I think this is actually a buying opportunity. It's really hard to find buying opportunities in the current market. But Pep I wouldn't say unloved, just misunderstood maybe. But from a technical point of view, I think this is a good opportunity if you want to try and make yourself 20% over sort of the next 6 months. I think this is a good opportunity, especially if you're holding those very top-heavy, expensive sort of ShopRites and stuff where you don't know if you can get in anymore at 350 Rand or whatever it's going to go to. So I think this is an opportunity for the short term, but not just the short term, I think probably for the rest of the year.
This is actually very interesting that you say that maybe some people would look at it and be like it's unloved, but maybe you're saying more misunderstood, because as much as we did have the rally, particularly in the retailers after the GNU announcement with all the optimism, I remember at the time one analyst chose Pepkor as his stock pick, saying that Pepkor had actually not participated in the rally as much as all the other retailers. Does then that make it, kind of, when you look at Pepkor compared to the rest of the retailers, that there might actually be way more upside than its peers?
Look, I think Pepkor is a different, their client base is different.
Yes.
They're sort of the lower end of the market.
Yes.
But they do the other things right. Their mobile business, their counter-to-counter deliveries, all the stuff that people seem to forget. So while they do sell cheap clothing and they cater for the broader market, the other stuff is where the profits come in. So I think they have steadied the ship. They're doing things right. But remember, Pepkor didn't participate when the market collapsed either during sort of COVID.
That is interesting.
So very much forgotten stock. And like I said, it was difficult to find a stock pick, something to buy in this market. But I do believe that Pep's doing things right. They're not in competition with sort of the Truworths and the Woolies. They have their own business model. And I think the business model works at the moment. And as the consumer gets stronger, I think so does the share price.
That's actually quite interesting, because I remember even in their last, I think, results, when they were talking about the strong performance from its fintech business, I was like, oh, Pepkor, fintech, because you think you think of the clothes. And it's also really quite interesting, also the moves that they're doing also in Brazil, something that we also tend to forget. But just quickly, before we go to the educational segment, I spoke about the shareholder IBEX that's offloading its stake in Pepkor. Has that had any effect in the kind of share price movements that we've seen, and maybe sentiment or anything like that? Or is it just something that's just happening in the background?
No, look, I think it's been systematic and organized. So it's probably just an investment decision. They've held it for a very long time, and they obviously have other plans for that money. So I don't think it's a negative for the stock. It still has strong shareholders, strong shareholding, and I think quite a robust business. So maybe just this different strategy from IBEX going forward. Maybe they, like I said, they've got plans for that money.
All right. Well, let's take a look at the educational segment, and you're talking to us about the importance of volume today.
I think I wanted to mention this because traders are generally focused on price and price action, but I don't think enough traders focus on what is moving the price, and that's the volume. I mean, volume on its own creates liquidity, and liquidity is the ease at which you can buy and sell or get in and out of a stock. And everybody knows it's very difficult to sell when you're holding a very illiquid stock. But what volume also does, it actually gives you the true interest in that stock. I've got the graphic there. That's just an example of volume bars, which you can put on the bottom of any chart. And what that is telling you is that, for example, if I was holding a stock and the share starts coming down, but on very, very low or very thin volume, I wouldn't be that much concerned, because there's not a lot of participation pushing the stock down. On the other hand, I'd be very concerned if we have a massive volume trading day with lots of participation pushing that stock down. That is in itself a signal that maybe I should be getting out too. So, if you have a low volume day moving a price, it means there's very little participation. So it's not a true reflection of what's going on behind the price. So inversely, when you've got high volumes pushing prices up, you definitely want to be involved.
Yeah.
So volume should be taken into account when you're looking at whether you want to enter or exit a trade. It's the first signal. When you see a whole bunch of people trying to get out, you should probably be getting out.
Yeah.
But if there's 4 or 5 of them, well, then you probably haven't much to be concerned about. And the other thing about volume is, we all know if you look at the stocks like Anglo American or the big blue chip companies, high volume gives you high trading action, more opportunity for fair pricing.
Okay.
So the price you see is the price you get, and that's the price you're going to trade at. So volume is important. It's something that should not be ignored by any trader, and I would recommend that especially novices, should be putting volume bars at the bottom of their charts to see how much is going through today, so that am I trading, is that stock trading more than yesterday, or more for the week, or more for the month? Because it gives you a very good idea of what direction you could be expecting that share price to go.
So basically, you should be careful, because the danger is that in a low volume stock, there is a high probability of that price being pulled up or pulled down, and then you kind of get an artificial picture.
That's exactly right.
Okay.
And we don't want to use the word manipulation.
But yes.
But low volume stocks are susceptible to that, where you can push the price up of a small cap with very little money.
Yeah.
And give it a great closing price today, and it just makes a beautiful candle on tomorrow's chart.
Yes.
And I think traders should be aware of that. And
yeah.
Even in blue chip stocks, you know what, if you've got volume bars, they tell you more or less what the average traded day is on a specific share. So you can use that as a gauge and trade around sort of that volume.
On maybe days where it's just, it shoots up and you're like, oh, wait a minute, something's going on here.
100%.
All right.
So volume bars, important, not just about price.
All right. Well, thank you so much for that, Rob. Really, really appreciate your insights on that and that technical analysis. That was Rob Pietropaolo, co-head of trading at Unum Capital.